Welcome back to the Sovereign Ratio. Today we're going to talk about that slow D and that fast K. Both lines of the Stochastic RSI, which is a fast-moving momentum oscillator that we can use for both long-term and short-term trading and investing. If you're new here, please smash the subscribe button, hit the like button, and leave a comment below. Alright, so the Stochastic RSI. The Stochastic RSI is basically a momentum oscillator that is a little bit faster of an indicator than the regular RSI, which we've already looked at. The Stochastic comes in two lines. It comes in a K line, which is the blue line that you're looking at right here on the bottom, and the D line, which is the orange line, a slower moving indicator on the Stochastic itself, even though the Stochastic is a faster moving indicator. So the Stochastic is useful in a lot of different ways. There's a lot of things to interpret with the Stochastic, and we're going to start here on the 1 week chart on Bitcoin to kind of look at that. So oftentimes the weekly time frame is such a large time frame that it does do a really good job of kind of calling tops and bottoms, right? You can see like the current cycle bottom right here matches up very well with this Stochastic K line coming down all this way to, like, what is this value? 5. So the Stochastic came all the way down to 5. But there are also times where the Stochastic is simply an indicator that would predicate a person to go to a different time frame. So let's look at here. Like on this first dump back in May 2022, the Stochastic bottomed out, in this area here, but as it stayed down in the oversold area, the price just continued to fall down. So that's kind of a scenario where the Stochastic crossing a certain point is like a, hey bud, time to pay attention to what's going on. When the Stochastic starts to cross back up with separation on a large time frame, that's when we start to say, okay, something is shifting and it might be time to take action. So like in this case, if somebody had purchased, like here, for example, at, 24,000. If somebody had purchased here at 24,000, just based off of the Stochastic bottoming out, they would have ended up with they would not have caught the bottom. They probably would have got it somewhere in this area. Price went down another 35%. It's not a good buying plan. Because we're taking a contrarian viewpoint, saying, okay, when the Stochastic goes to the bottom, I need to look at buys. Well, that's great and that's true, but what we really need to look at is when does the Stochastic start to move the other direction with some sort of confirmation or indicator that it's a real move. Because we could have bought at any point in time during this bottoming of the Stochastic and still been in the red. But here, I would say this bar right here is where we start to see, if you look real close down here on the Stochastic in this area, there's actual separation that's happening. When you see the K cross above the D, because the K is the faster moving oscillating line, when you see that cross above the D with separation, that's a really good time, like, okay, maybe I need to look into buying right now. So had we have done that, yeah, we would have got a great buy. However, the Stochastic went straight back up and the price did not move that much. Price went up roughly 35%. And when the Stochastic topped out, it dumped again. Good thing is we caught it so close to the bottom here that it's not super relevant. So like best case scenario, somebody probably could have gone in 50% here and then 50% here when it did a double bottom. And that, you'd still be way in the money today. If we got in here at 20K and then we got in here at 15K, that's an average of 17.5K, which would still be a 73% gain to where we're sitting right now. So in that regard, is the weekly Stochastic going to produce immediate results every single time? No. But in a long term, a combination of looking at the weekly and also looking at even the monthly can give us a really good picture on where we are. So you can see monthly Stochastic has been at the bottom for a very long time. And we finally did not get real separation until January of this year, which is this candle here. Now, granted, the bottom of that candle to the top of that candle is 38%. You would have missed out on a 38% gain. However, if you would have noticed the separation here, and bought anyway, you would have got at the close of this candle here around 22K, and you would still be sitting up 26%. There's nothing wrong with a 26% return. So using that kind of analysis on this gives us a nice long-term plan for consistent gains. Is it going to be effective 100% of the time? No, but that's why we have an amalgamation of other indicators to look at. So long-term, I think that's a fairly viable strategy. And in fact, here on the weekly chart, I've actually gone through and I've looked at the bear market relief rallies in terms of the stochastic, which you can see I have marked here during periods of bear market relief rallies. Like this one was this one was 119 days back in 2019. This one that we're currently in is, it would be 119 days on May 22nd. So that's kind of what I was targeting, was like a May 22nd top for this based off of historical information. But in a long-term view, anyway, that's how the stochastic is useful. In a short-term view, however, my LARP lines for the EMA 9 and the top of the Gaussian channel are kind of in. This was like my prediction of what the EMA 9 and the Gaussian channel would do, so I could plan my own trades. But so don't mind these squiggly ass lines here. Anyway, so looking at like the 4 hour, for example, this is a much smaller time frame. So if we just look at where we are right now, this is starting to have downwards posture. But just because the stochastic RSI starts to curve downwards does not mean there's going to be a huge move. It doesn't necessarily mean that whatsoever. The stochastic could completely reset and price barely move at all. It happens all the time, and vice versa. Stochastic could cross up and go all the way up to the top, and there's barely any price movement at all. And the stochastic in that regard, it's almost like you have to start at a high time frame. All right, so the high time frame, let's say the weekly. The weekly is crossing up, which would indicate we generally expect price to go up. Well, let's go to the daily chart. If the daily chart is going down, we would probably want to wait to see the daily chart curve back up, right? To where we have an upward movement. So we have upward weekly, upward daily. Okay, we have those two confirmed. Now let's go to the 4 hour and see what the 4 hour is doing. Well, if the 4 hour is starting to curve down after both of those conditions have been met, we're probably still need to wait a little bit, right? So then we wait for the 4 hour to go down to bottom and cross back up. When those three things are in sequence, the week, the day, and the 4 hour, that usually would be a pretty good probability of a time to buy, right? Like you're probably going to get at least a decent return based off of that purchase. But again, if we add in the RSI here, let's look at that, which we've already covered in a previous video. So the RSI is kind of sitting here in the middle. It's not really making a decision on the 4 hour, but again, we have had drives of bearish divergence. However, sometimes that's irrelevant in the big scheme of things. Whenever we're approaching like perhaps replicating the 2015 cycle, like I posted in a previous video, go ahead and check my channel and check out the video that says 2015 again to see kind of my thesis on what's happening right now. Because normally I would look at this and say, wow, this is bearish. But at the same time, there's also hidden bullish divergence right here. Because if we look at the bottom of this candle, I'm going to try not to mark my chart up too much here, but if we look at the bottom of this candle, we can see the RSI is at a reading of 57 right here. But if we go down, RSI is at a reading of 40, but price is almost the same as it was back then. So what's happening is like price is level, but RSI peaks are down. So we would look at it actually right here and say, okay, so RSI is lower, price is the same. Generally, that is a good relative indicator of hidden bullish divergence that price wants to move forward. So right now what we have is a combination of hidden bearish and hidden bullish divergence. When those two things come together, generally it's like, okay, what makes sense in the long term? And right now, I personally think the longer term narrative is that both Bitcoin and assets are going to continue to rise until the 37 to 42K level. My personal opinion. I'm happy to be wrong. I don't really care about being wrong. I'm a reactive trader. But the stochastic RSI in general is one small piece of a trader's tools. If I were to expand all of this, I got the MACD, I've got the BBWP. These are all indicators that we'll look at in separate videos. But the stochastic is useful in a lot of situations, right? So if the stochastic is pointed up, generally we expect price to go up, and then we could potentially wait for the next 4-hour cross to the upside after we've already got the daily confirmation and take a long at that point. And maybe we're only shooting for like a 2% long, right? Sometimes Bitcoin moves in about the 2 to 2.5% range. So we take a long, we're happy with our 2.5% profits, we get back out, and we wait to see what happens next. So it is a useful tool. When you're looking at the stochastic on something like a 15-minute though, I find some traders use that. I just don't find that useful at all, because there's so much bad data in there. You know, you might have a giant, like when the stochastic crosses up right here, for example, and it goes to the top of the channel, there's this massive move up, right, of 2.5%, which on this time frame, that's a massive move. On a weekly time frame, that's nothing. But on this time frame, that's a big move. But we also see many iterations of that where we go from the bottom to the top and almost nothing happens, right? So I don't really see it as a useful tool on the small time frames, except for confirmation, working your way down. So weekly, daily, 4-hour, hour, 15-minute. When you have confirmations that line up on all of those time frames, that's when you're looking at like a perfect trade scenario, which is very hard to identify, right? So if we have crossing up weekly, crossing up daily, crossing up 4-hour, crossing up 1 hour, crossing up 15-minute, that's that small time frame where it's like, hey, you know, I should probably go long right now and at least just take my 2.5% profit and be happy with it. But again, on a weekly time frame, this is more for your average long-term trader here. And I have a lot of indicators here. I should probably clean that up at some point. Anyway, when the K crosses below the D, generally that is selling pressure. When K crosses above the D, that's generally buying pressure. So not a hard and fast rule, but that is the intention of the stochastic RSI. You combine that with the RSI and other indicators, and it can help you trade successfully. So if you have any comments, questions, please go ahead and leave a comment in the chat below. Please hit that subscribe button and hit that like button if you appreciated the content. And I will be bringing more crypto information, whether that be altcoin picks or daily updates, news, whatever, in addition to other things like men's improvement, professional development, just general life improvement, self-improvement stuff. So I will be bringing that in the future, and I appreciate you coming by. Happy trading, and we'll see you in the next video.